It's Thursday, May 6, 2021, and today we're talking about Wealthsimple raises the largest Canadian private round ever. Sonder is checking into a SPAC. BuzzBuzzHome moves into a new build with Zonda. And this week in early stage funding, AgTech is sprouting with raises from Precision AI and Carrot Ventures. Let's get started. First up, Wealthsimple raises $750 million at a $5 billion valuation. Obviously, this is a company very near and dear to my heart here. Maybe we can get that in the shot. There we go. And probably most people that are interested in the Canadian tech ecosystem too. Now, they've raised the largest private round in Canadian history. Alex, what makes Wealthsimple so special?
Well, Wealthsimple is special because many reasons. First of all, just how fast they're growing, the ability to find chinks in the armor of the old Canadian financial institutions. And I think maybe as we'll get into the conversation today, the way they've gone about building such a big company so quick, they've actually taken lots of the traditional rules about becoming a big company, how to raise money, attacking Canada only, and laughed in the face of them and have built what's now the biggest private tech company in Canada's history.
One of the things that makes Wealthsimple so special to me, of course, is Wealthsimple's CEO and co-founder, Mike Katchen, taking a break from hanging out with Drake. We're excited to welcome Mike to TechTO Quick Takes. Welcome, Mike.
Thank you. Thanks for having me, Jason and Alex. And you forgot the most special part about Wealthsimple is, that Jason used to work there. Obviously, we were here only because of that.
I don't say you're there despite that, but
that's right. Now, before we dive in, I think it's worth noting that since the very beginning, Mike, you've been a huge supporter of the TechTO community and a champion of Canadian entrepreneurship. And if anyone disputes this, I've got the receipts here from December 2014 to prove it. Let's just take a quick look.
Well, first, a big shout out to Jason for starting this up again. I do way too much speaking these days. It's a really good thing, but it's amazing to see the Toronto tech community alive and well, and lots of exciting companies, coming down the pipeline here. So if you're building a company, awesome. If you're not and thinking about it, get started.
Well, that's an awesome clip. Don't you love our logo back then?
It's awesome and depressing. I had so much hair back then.
We all did.
Building a tech company that really takes some away from you.
Yeah, I blame my kids. Mike, thanks for spending some time with us. Love to ask a few questions. First, tell us about this round that everyone seems to be talking about. What is, tell us the details and how it came together.
Yeah, I think the details. We raised $750 million. Which is a pretty big round. And, it's not that long after we did our last round. So one of the questions I've been getting a lot of is, hey, you guys just raised, 7 months ago, why are you doing this again? And I think that the most exciting part about our business is just how growth continues to accelerate. We raised last round and I think have grown even faster than we expected to following that round, and see this window of an opportunity to really become the largest consumer finance company in Canada. Accelerate our client growth from about 2 million clients to tens of millions in the years ahead, and fill out the suite of products around those clients that really help them navigate the myriad of financial choices they'll face over their lifetime. And so for us, I don't think this really changes much about what we're doing. But I was speaking with the team yesterday about it, and the quote that came to mind was, Patrick Collison is famous for many things, the CEO of Stripe, but one of the things he's famous for culturally is if you come to him with a business plan for something you want to do, he will often ask you the question, what is the way more ambitious version of this plan? And so I think I just shared the same question to my company, or the team yesterday. This doesn't really change what we're doing, but what is the way more ambitious version of what we're doing? How do we go faster and bigger than what we'd ever kind of imagined could be possible before?
So I have a couple more questions about this round, but first I want to go throw that question back to you. What is the way more ambitious plan now?
Well, I think it's a question of moving, faster. We really do believe that we can replace the banks as the leading consumer finance company in the country. We think we can do that pretty quickly. And so it's a question of, how do we accelerate client growth? And so we get the kind of scale in the client base that really puts us at the same league of the big banks in Canada. And how do we fill out the product suite so that if a client has any financial need, we're there to support them across any of those choices. And not only have we kind of built each of those products out, but we've also done it in such a way where the products work together to deliver more value for clients. And like the example I always love about this is, we now own kind of a couple investment businesses. We own this tax prep business. And one of the things we want to do within a few tax seasons is automate your tax filing for you. Use all the data we capture from the investment businesses, from what will soon be our spending business, Wealthsimple Cash, to pre-fill a tax return for you and simplify this like awful pain point that happens every year. No one likes filing their taxes, and can we actually get to a place where we can make that disappear for you entirely? And so that's a pretty ambitious plan. Usually startup wisdom is do one thing and focus and do one thing really, really well. We're trying to do a lot of things really, really well, and it's not an easy thing to pull off.
Cool. I love that ambition. Just two more quick questions about the round. So one thing that's getting disproportionate amount of buzz is the Canadian celebrities and sports athletes. So how do they get involved? Do they did Drake call you up and say, man, I got to get in this round? And what's your rationale for letting them invest?
We have been trying to get Drake involved for a little while now. I think that we see it as, we're trying to build, I think one of the things Wealthsimple is known for is the brand that we built. And I think we see ourselves as trying to build this iconic Canadian brand, iconic Canadian company. And we always thought it would be cool to surround the brand with iconic Canadians. And so when it came to raising, we had a couple discussions in the past with Drake, and we're fortunate to have an introduction to him and his team and to have the opportunity to present the plan. And fortunately, I think because we spent so much time building this brand, the celebrities knew of the company, the brand resonated with them. And when we shared with them the mission, which is really all about helping people achieve financial freedom and making the tools of financial freedom accessible to everybody, it's hard not to be supportive of that desire and dream of what we're trying to do for people. So we were lucky that a few came on board, and we're pretty excited about just having some more iconic Canadians around the table that can help us as we think about how do you build a brand and how do you get Wealthsimple to an even greater level of awareness in the market.
That's awesome. I know it will work to help drive your awareness, because I got a text from one of my sisters going, "What's this Wealthsimple?" Because I think it would the rounds covered by EF Canada, I think. Another investor that's something unusual he did is he partnered with Power Corp early on, and in the last two rounds, the one 7 months ago and the one this round, they invested, but they've also taken money off the table. So, what was your rationale originally partnering with Power, and how's that relationship changing going forward?
Yeah, I mean, Power's been an incredibly important partner for us since the very, very early days of Wealthsimple. And, primarily because we saw the importance of building this brand. We are, at the end of the day, in the business of trust. We ask people to trust us with their life savings. It is an enormous ask. And we always knew that, especially when we were getting going, that we had no clients, no assets, no credibility in the market, that we knew that building a brand that was loved and trusted and distinctive would be an opportunity to help start seed kind of that trust with our clients. And so Power bought into that vision and gave us the kind of capital early that we needed to execute that plan. It required a lot of capital to do it. And so, huge credit to them for believing in that plan, because at the time we looked kind of crazy. Acquisition costs were through the roof. We were buying Super Bowl ads, which make a lot more sense in Canada than they do in the US. We can talk about that another time, but they bought into this vision, and it really has paid dividends over the last many years. And why they've taken more of a backseat in the most recent rounds is not because they have any less conviction or desire to be a long-term strategic partner, but as the business has grown and we think about the long term and the path towards an IPO, we want to make sure that we have a broader shareholder base, that we come across as this independent business. And that was really important to me and to the Power Group to set the company up for success as an independent, publicly traded company someday. And this has just been part of that plan of getting there. It doesn't in any way change their commitment to the business.
That's awesome. And I love the idea that you have to have a more diversified base of investors to actually eventually go public. I won't ask you the obvious question about when you go public. I'm sure we'll read about that ahead of time. I also love a story about how you focus on brand from the beginning. So I think brand's one of your pillars of success. The other is how you've expanded the relationship. When you launched, you were lumped in with a bunch of, for lack of a better word, robo-advisors, and now you're much more. So how do you view yourself as what you're offering customers, and how have you landed on this suite of products to get here? Because it's an interesting journey, because you've retrenched from some stuff and you focus. So how do you decide what the long-term vision is, and how do you fill it up product by product?
Yeah, I mean, the ambition is to become, like I mentioned, the leading consumer finance company in Canada. And so we use the words internally, the primary money relationship for our clients. And really to be the partner that's there no matter what kind of financial question or product you're looking for, that we're in a position to help support you, deliver advice, make it easy for you to get to a great outcome with that suite of products. And we started out with long-term wealth management. It is a wonderful business that is really great for people. The challenge with a wealth management business, as you try and scale to millions of clients, is the trust required to earn that first relationship. And so, we were running into the issue that no one sees a Facebook ad and then decides to give you their life savings. It just doesn't work. You need more, nurturing, more trust. It takes time to win that relationship. And so what we found is, as we've added new products that are lighter touch to get going, we massively accelerated kind of client acquisition. But what we found is no matter what product a client first starts their relationship with Wealthsimple, we're able to earn more and more of their financial relationship over time. And so we started with kind of broadening, just from the investment business into very natural adjacencies. So investments, savings, trading. And just in the last year have we really started to go into new things like taxes and everyday cash, peer-to-peer spending, peer-to-peer kind of payments and spending accounts. So this kind of next phase of the business is uncharted territory for us, but one we're very excited about, is moving even more into everyday financial transactions, that sort of thing.
Cool. And then as you think about expanding your product suite, you now have a lot of cash, a very valuable currency. How do you view build versus buy?
We're pretty agnostic, is the honest answer. We have done both. We've made 2 acquisitions that have been remarkably successful in our history. One was an infrastructure acquisition, Canadian share owner, that became the back office that powers all of our investment and savings businesses. And Simple Tax, which is now Wealthsimple Tax, and just an incredibly important product in our portfolio that helped over 1 million Canadians file the taxes this year. So we like both, and I think for us it's just a question of, as we think about the next products in our roadmap, are there teams that are really mission-driven, have built some unique capabilities in this space that could really accelerate our efforts, and are excited about how we, now with an ecosystem of 2 million Canadians, can also accelerate their plans to get to where they want to go and have the impact that they want to have on Canadians' lives. So we're pretty open-minded about both of those solutions.
That's exciting to know. Jason, I think you have some questions. I could ask for another hour, and I really appreciate Mike's time, but let Jason come up.
Yeah, Mike, we let our TechTO followers on LinkedIn and Twitter know that we were going to have you join the show today. And so before we let you go, I've just got a few rapid fire questions from the community. Are you ready?
Sure.
All right. What are you really going to spend the money on?
A big party with Drake.
How has your role changed at each of the different stages of scale at Wealthsimple?
Is this a rapid fire question?
Yeah, you can give it to me in a couple sentences.
Okay. Early on, it was all about hustling for clients. So Jason knows this. I do like 1 million events a day because it was the only way that we could effectively acquire clients. I do speaking events, and that was just my whole role. I think then it evolved into growing the team and really kind of investing in recruiting and owning the recruiting function as we scaled the organization. It's now, migrated into, we have this incredible team, and it's setting a strategy, aligning everybody against it, and empowering these amazing leaders that we've managed to recruit to do the best work of their lives. And so that's how I think about my role today.
This one's a little tongue in cheek. When will Wealthsimple be profitable?
What I can say is that our financial results are well ahead of plan. We don't really disclose what they are, but I can say that they're very well ahead of plan. Not a very helpful answer, but I can tell you that.
That one's more for my father-in-law who, doesn't understand how to value a business unless there's some money in the bank at the end of the day. So got to sneak it in there. Now, Mike, you've done presentations on how to raise $2 million in 2 weeks and how you raised $30 million in the first 2 years. Can we expect a future presentation on how you raised this round?
Sure. I mean, always happy to share lessons learned with the community and hopefully help people avoid the mistakes that I've made plenty of along the way.
And lastly, for all those early Wealthsimple employees out there who haven't yet sold any of their stock, what do you tell them? This is, thank you. Thank you to their, their support. They've earned every share that they own. And, it's worth something because of the value that they've created, and just an enormous appreciation and gratitude, and hopefully incentive to keep working hard to create even more value. I think that the most exciting part about this round is it's a fun milestone. No question about that. But it still feels like we're just getting started. And that's why people are investing, is because they believe in the opportunity to build something way bigger than we have today. And that is what gets me going every day. And I think that's what gets the team going every day. Is it's just still day one. And this one's a late addition from the community. There's someone out there saying that they manifested the investment from Drake. What do you say about that? Is that Jason Goldless? I can't confirm or deny that. For sure. Amazing. I mean, I think this is something we've been excited about for a long time. We're very excited to have Drake on board, obviously, and as well as the other kind of investors and partners that came in on this round. Mike, we all believe. Thanks for joining us so much today. Thanks, Jason. Thanks, Alex. Bye, unbelievable. Everybody. Now, and if you haven't already tried out Wealthsimple, they are a proud supporter of the TechTO community, and you can use the link in the description or the comments wherever you're watching or listening to get started with a very special offer. There are plenty of recent and upcoming Canadian tech IPOs, and Wealthsimple Trade is the best way to bet on the growth of our ecosystem. All right, Alex, come back up. Why do you think this news is so important to the TechTO community? There's so many reasons. I could do another 20 minutes on that alone. But I like how it breaks all the rules. The old adage that Canada is too small is now proven no longer valid. You've at least for financial services in the financial marketplace. It seems with tech adoption and now mainstream in Canada, you can build a Canada-only fintech company. The other thing they did is they didn't raise from VCs early on. Mike, partnered with a Power Corp, and they grew to a huge size. And every VC will tell you, don't take strategic money at the beginning. So lots of rules were broken. As a founder or early tech employee, it'll be interesting to see how Mike and Wealthsimple uses the currency it has. Are they going to start acquiring lots of companies? You heard here, he doesn't seem to care if it's build or buy, I guess it makes the most sense. And so that's I like to see companies exit. I like to see them better when they exit to other Canadian companies. As a Canadian, I think it'll be interesting to see how the old guard financial institutions react. Typically, they ignore everyone, and once they have a small bit of market share, they'll go buy them. I think Wealthsimple's too big to be bought by RBC now or by TD. So are they going to start acquiring lots of fintechs? Are they going to be taking a very different approach? I think they're kind of locked up and are kind of in trouble. Finally, we alluded to it, but what would Wealthsimple be worth if it went public? Thinkific went public at $1 billion. I don't know. Again, don't know the revenues, don't know the financial situation, but I just think the name and the demand for a Wealthsimple share, if it went public, would be quite high. And I wouldn't even dare to guess what that'd be worth. But I'd be excited to see it. So hopefully we can get Mike on here in a month, as after the IPO. That would be awesome. Alex, if you love keeping up to date on the people like Mike and the companies like Wealthsimple that are shaping the Canadian tech scene, you need to keep subscribing to the TechTO newsletter. Alex, what can subscribers expect in tomorrow's edition? Well, we're going to do a company spotlight where we go through the details of the company. We're going to take some of the quick takes and basically put our transcription there. It might be on the Wealthsimple. And you'll get to see a preview of tomorrow's founders and funding. But more importantly, if you're reading it already, do your friends a favor and forward it to them and get them to sign up. I love that. Next up, Sonder is checking into a SPAC. Alex, what is happening with Sonder out in Montreal?
Well, first of all, I'd love to say that it's not every day that we do this, and a $2 billion IPO is a secondary news. That just shows you this the current state of the tech ecosystem. So, let's be clear. Sonder's Montreal founded, but based in San Francisco now. They're a Canadian company in my heart. They're a travel tech startup that's planning to go public by merging with Gore's Metropolis 2 SPAC. And they're expecting to raise 650 million USD from this transaction and go public with an enterprise value of about $2.2 billion.
Yeah, they'll always be flat book to me. I actually did a Wealthsimple lunch and learn at their office in Montreal in 2015. You mentioned a couple names in there. Who's the Gores Group?
So Gores Group is a legendary private equity company that was founded in the late 80s. And Alec Gores and his brother actually has another private equity firm, and they compete. Were some of the first companies, basically private equity firms, to actually start buying tech companies and growth companies. It's very hard to get information about the size of the private equity firm now, because I think it's all his money. The last time it was reported was 2 billion AUM, which I feel like that's a bit bigger now. He's also been early to the SPAC game. They've had 7 SPAC transactions that have done pretty well, including companies like Hostess. I don't know if you remember. I think those are the guys that make Twinkies. So if you're eating a Twinkie, you're supporting Al Gore, who now is supporting Sonder.
Now, SPACs have been hot. SPACs have cooled off. What is a SPAC, and what's the current climate for SPACing?
So first of all, the funny thing with SPACs, it's a U.S. focused vehicle or entity, and we've been doing similar things to SPAC all the time in Canada. We just call them reverse takeovers. What a SPAC is, it stands for a special purpose acquisition company. So basically, when a company used to go public or goes public, they can go public themselves. It takes a long time. There's a lot of work. What a SPAC does is someone else goes public and says, hey, we've now got a public company. And instead of you going through the whole IPO process, you can merge with this public company. It's called a blank check shell. They're publicly traded. And it's a quick way to go public for private companies. Takes care of a lot of the work. Different type of expenses. Instead of paying the bankers, you're paying the acquirer who gets a big chunk of your company. But they've been a rage. I think last year at this time, there's probably one a month. January, there's probably 20 SPACs going public. Now it's being slowed down because not all of them are performing well. The SEC is putting new regulations because it's being viewed as a backdoor. So, I think I read there's something like $2 trillion available through SPACs for companies that want to go public right now.
Got it. So what was attractive about sort of Sonder's position and their numbers today that got this group and the SPAC interested?
So first, maybe I'll go through Sonder's numbers and then take a hypothesis on why this is interesting. So in the middle of the pandemic, 2020 revenues were 116 million USD. Sonder's projecting they're going to get to 4 billion in revenue by 2025. Historically, they've had 1 million guests and they've raised 560 million, so they've been well capitalized. They have 4,500 listings in 300 properties in 35 cities in 8 countries and 1,000 plus employees. So it's a decent sized company already. And what's interesting is what we didn't talk about is what are their position in the market. So if you go back to the late, or early 2000s, you went traveling, you usually stayed in the Marriott, the Four Seasons. If you had a bit more money, you stayed in a hotel. Then late 2000s, early 2010s, everyone starts saying Airbnbs. And where Sonder operates, it's somewhere in between them, because Airbnbs, hey, they're very personalized. And because they're very personalized, you may have quality, different variability in the host and the location, no matter what you see in Airbnb. Hotels, sterile, but they have a brand and you know what you're getting. So Sonder's approach is, hey, we're going to manage a bunch of properties and give you an Airbnb-like experience with the quality and assurance you get from a brand like Marriott or Four Seasons. So before COVID, they were one of 4 companies doing this, and all of them were growing like gangbusters. COVID hits, their 3 biggest competitors disappear. Sonder gets their operations in shape, takes a bit of a pivot on who they're serving, and basically outperformed all their comps by 2.6 times. So they look like this is a big potential market. They're now the clear leader, and it may be the only one with real scale. So if you believe that travel is going to rebound and you want to come in that's shown they know how to operate, it's an interesting investment, and that's why they're going public via SPAC.
I love that. And Alex, you think travel is going to rebound?
Yeah. Have you been home with your kids for the last 12 months?
And so why should the TechTO community care about this deal in particular?
Look, so first of all, going back to that, I think travel tech is about to get hot. I think there's vaccines are rolling out. There's pent up demand to leave your home. The companies that survived are going to thrive, and I think you're going to see a lot more bigger rounds. You just saw another company a bit earlier, Sherpa, raise $8.5 million last week. Their travel visas. So I think you're going to see capital flow to this market, and then after they start financing the winners that currently exist, I think it might be a good time to start a startup in the space if you have a unique insight. Second, Sonder's story is also fascinating on two fronts. First, it was based in Montreal and decided that it had to move to San Francisco to grow. I don't know if that would happen today. I think the ecosystem is in a different place where they could feel confident staying put with their HQ. Second, I don't know if this was their vision at the beginning to do what they're doing now, but they start off as Flatbook, which was subletting students' apartments in the summers and then guaranteeing them a rent and then going and putting on Airbnb. And that did not look like a scalable market. That did not look exciting or had moats. It was a niche category, which they dominated, and they've used that momentum to now build a category killer in a much bigger space. And then finally, this is all about execution. We talk software. They're not just software, right? They actually have physical spaces. They're making a bet when they rent a place, because now they actually get developers to build their location. So this is about making the right decisions that aren't easily fixed. It's about then executing for the customer experience and for the margins. And it shows that strategy and software get you some part, but in some parts of tech, execution is way underrated.
Absolutely. I mean, this is not just a software business. It is people and cleaning and logistics and all that all rolled into one. And Alex, if you want to join a community of Canadian tech founders, entrepreneurs, and investors who are also iterating, pivoting, changing, growing, and doing the hard work of software and more, you got to join the TechTO.org Insider Membership Program. Alex and I are there every single day answering questions, making connections, and helping grow the community. Alex, who have you met recently in the Insider Program?
So I met Kiana, very interesting member. She joined recently. She actually has come to, when we actually could meet people in person, and hopefully we'll meet again soon, she would come to the TechTO events in Toronto. And I remember she got up once and said, I'm inspired by what you're doing here. I want to start my own community. She went about and did it. And now she's come back and she's joined our community to contribute. And she's not only someone that's an individual contributor, but she understands the whole community. I'm super excited to have her join. Super passionate person that is there to actually make the world a better place.
Of course, Kishana. That's awesome. Super excited that she's joined us. Can't wait to keep growing together. Next up, BuzzBuzzHome moves into a new build with Zonda. Founder Matt Slutsky presented AgTech in February 2015. That was just a couple months after Mike from Wealthsimple did in December of 2014. And if you remember, Alex, he spoke about growing without raising angel or VC funding.
Yeah.
And I'm sure that's one of the reasons that we haven't heard too much about BuzzBuzzHome in the intervening years. So Alex, what are we hearing now?
Well, as you said, BuzzBuzzHome was sold to a company called Zonda, which is US based. This is actually Zonda's second acquisition in prop tech in Canada. They just bought another company in Vancouver just a couple months ago. What was it called? I just have to look it up, but don't have it written down. But they are buying companies. BuzzBuzzHome, for those people that don't know, was bootstrapped, and they grew to become a market leader in online new home search for consumers and a data-driven marketing tool for developers. So if you were looking to buy a condo in Toronto or any other city, odds are you search for like the name of the condo, BuzzBuzz would come up. They would have the layout of the plans, the condo, you could see what's on the 5th floor, what's on the 2nd floor, and it became the place where you start your search. So that was a great lead gen for developers. And also they could then find that about, okay, everyone's looking for 3 bedrooms all of a sudden. We don't know what's happened. So maybe your new developments should be 3 bedrooms, or hey, there's a lot of demand at King and Spadina. If you can get some land there, which I don't think you can, you should go look at developing. And they bootstrapped it. They built a nice business, and now they've got an exit. And so what's interesting here is, from what I could find online, there's estimates that their revenue was $9 million USD, which imagine there's good margins. They only had 50 employees, so probably good margins. They pull out good money every year. They owned a niche, and now that someone wants to roll up the space, they got acquired. So there's a perfect example where you could do really well without building a company at scale or getting outside investors.
And do we have a sense of the size of the deal?
Looked hard, couldn't find, but if you go with, let's say it's some multiple of revenue, even if it's 3-4 times, that's a pretty nice payday.
That's great. And so why do you think this story, we've done a $5 billion story, a $2 billion story, and now here a company with 9 million in revenue, maybe acquired for 3 or 4 times sales. Why is this interesting for the TechTO community?
Well, I think an ecosystem needs companies with all different ambitions and all different ways of existing. And just the nature of bootstrap companies, we don't talk enough about them. And I think it's a crime. And BuzzBuzz is one of the few founders that came out, talked about bootstrapping, and still bootstrap today. A bunch of others have went and raised money. And they show you can be successful doing it, and it also shows they've done it by basically dominating a niche, and it's, that generates revenue. So niches are profitable, and you should, there's no harm, no foul. And look, 99.9% of the population would love to be the founders of BuzzBuzzHome. Finally, one other thing, it looks like Zonda is rolling up prop tech companies. It's funny. They're going back to private equity firms. One way they used to make money was like doing a roll-up. They'd go buy a bunch of small like dental clinics.
Right. You had a course at Wharton, right? Roll up 101.
Yeah, I teach my kids that, right? My kids try to do roll-ups of lemonade stands, but now it seems to be hitting the tech industry. I can name companies that are doing roll-ups of SaaS businesses. The big one everyone knows about is direct-to-consumer. We have Moonshot Brands in Canada. We have Andrew Wilkinson buying up Shopify-related stores, and now just someone doing communities, going around buying the TechTOs of the world. And now it looks like there's someone doing prop tech. So if
not
you have
for sale, Alex, doesn't matter. Not for sale.
I'm not selling, but there's someone that's trying to buy these companies, right? So if you're a tech company, there's probably someone trying to buy you to roll you up. So if you want to exit, you can go look around.
Amazing. We have some super interesting interactive live streams coming up, Alex. First, discover the untold stories behind the fundraise on TechTO's Founders and Funding Show, where Alex, you sit down with a venture-backed CEO and the VC partner that made the bet for a candid conversation of how it all happened. Who will you be sitting down with tomorrow at noon Eastern?
Well, Malik from Nesto and Francois from Diagram. So it'll be interesting because Diagram takes a studio model. It's very different than most venture founders or venture companies. And Nesto, Malik, is a founder, but it's a spin out from Diagram. So it's a very different nature. It'll be very interesting to hear the story of how the company came to be, how it's like to work together, and what success looks like.
And next Friday, we have a very special episode of Founders and Funding featuring Benedict Evans and Matt Cliffords of Entrepreneur First. Can you tell me about what to expect at this special episode, Alex?
Well, you expect a very frank discussion about tech in general, probably get into Amazon and e-commerce. For people that don't know Benedict Evans, he was a partner at A16Z or A16Z, I guess, as they say it. He is an expert analyst in telco and media and in technology. Is one of the better newsletters out there. He's always talking about trends. He's a big defender of Amazon, actually. And Matt is the founder of Entrepreneur First, which is a program that helps spin up new companies by introducing people to each other. They'll be talking about their journey together and how they work together.
And if you can't join us live, you can also listen to all our previous episodes on TechTO's Founders and Funding podcast, available wherever you listen to podcasts. And on May 17th, TechTO is heading to the prairies. We're bringing Michelle Romano from Clearco back to our stage to talk about her new double unicorn status, Duocorn. And we'll also have Jordan Bosch, founder and CEO of 7 Shifts, talking about the journey of building his company. Michelle grew up in Regina, and 7 Shifts is headquartered in Saskatoon. So we said, what the heck? Let's make it a prairie theme. Anyone else you're excited about in the prairies, Alex?
Well, we didn't get to the AgTech financing, so I don't know if you want to spend 2 minutes on that.
Coming up next. Hang on. So you've got some AgTech that you want to talk about. But if you're listening or watching now, and you know a prairie startup that needs the national stage at TechTO together, just leave it in the comments and we will get them featured. All right, last up, this week in early stage funding, AgTech is sprouting with raises from Precision AI and Carrot Ventures. Let's start with Precision AI. What's the deal and why are you excited about this one, Alex?
Well, going back to the prairies, I think AgTech is an interesting space. And Regina-based Precision AI aims to support sustainable farming practices with computer vision technology and has closed $20 million in seed equity. Now, they haven't disclosed how much is from VCs and how much is government grants, but I find this really interesting. They bootstrapped in 2018. They've now raised money, and the buzz just everywhere is about clean tech. Well, you know what has a lot of impact on clean tech? AgTech, right? You can make ag more sustainable. That's clean. And I think this is a start of funding for our prairie provinces, because I think this is their strength. And I have a feeling this is going to be one of many ag tech companies we get to see finance out of the prairies.
And Carrot Ventures, what's the deal?
Carrot Ventures, talking about tomorrow and Diagram, Carrot Ventures is what they're calling a company creation firm, launched by VC firm AVAC. They've raised $15 million to basically come up with ideas in ag tech, recruit founders, and spin them up. They expect to invest $1 million on average per company, with approximately half the fund being saved for follow-on investments. So this is interesting to me because you're now taking the Diagram model, which is used for fintech, applying it to ag tech, doing it in the prairies. And so it'll be interesting to see. The hypothesis here is that the initial funding for ag tech may be hard, or I'm not sure if they're trying to go because the funding's hard or the ideas are hard. But I think this is an interesting approach to take to a sector that has not been as sexy and as well funded before. Because the whole idea usually behind sort of a studio model is like, hey, SaaS business is a proven model. We can spin them up quickly because we have a lot of founders. Or fintech's a proven model. So they're big. You've answered a market size question. You've answered what the viable business models are, and that's when the studios come in. And I think this is a bit early, but so it'll be interesting to see how their success is.
Would you want to invest in either of these deals, Alex?
I haven't seen any details, so it's hard for me to say. I don't know the founders. If the founders are great, probably.
And what's your take here for the TechTO community?
Well, look, I think we've had, over the last 2 to 3 months, we've seen the traditional hubs get a lot of attention, and everywhere's, it seems like everyone's hitting all cylinders, be it Montreal, Vancouver, Waterloo, or Toronto. But talent is not locked up. Everything can be done remotely. And I think there's an opportunity for the TechTO members in provinces or cities we haven't talked about to build businesses, because there's capital out there, there's talent out there. And I think it's important to play to your local ecosystem strengths at the beginning before you go wide. And I think AgTech, if it's going to have its time, will play into the prairies.
I love that. Alex, thanks for all the insights this week. What a week in Canadian tech. And if you haven't already, you've got to like and subscribe to TechTO wherever you're watching or listening, and we'll see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.